So the first company we're talking about is Pandora.
Mm-hmm.
I know you have a attachment for this company. My son does. He actually knows how to pull up Pandora on our phone and play nursery rhymes, which is endlessly scary. But anyway,
I always forget about how deep their catalog is in terms of, like beyond like standard pop rock music, like the stand-up comedy channels that they have, like some of the kids stuff that they have.
Yeah.
It's
Mary
kind of
Poppins,
yeah.
ABCs.
The things you forget
Barney.
about when you don't have children.
Yeah. Benefits of the product aside, they're having a rough time making money.
Yeah.
Tell us a little bit about that.
So basically with them, like, earnings happened, right? I mean,
Yeah.
like that's what happened. That's what caused all this devastation. So the company reported in late October, over the last 3 months, they'd reached peaks of like $22 a share. They're down around like 13 right now.
When we last talked about them, where was it? I mean, the number 25 pops into my head, but I feel like that's wrong. Anyway.
No, it was a little lower than that. And when we did our check-in post-acquisition of Ticketfly. Right.
Yeah.
I think that was about a month ago. So and they were in the high teens, maybe low 20s around then. Basically, in their quarterly report, we look at some of the main metrics for their business, and they were a little disappointing. So listening hours and active listeners, those are kind of your two money metrics to look at for an ad-based business. So listening hours were up just 3% year over year and down 3% sequentially.
This is 2015. We're all supposed to be moving to the cloud and online and stuff. CDs are supposed to be dead. Those are really low.
Yeah.
That's not what you want.
Not what you want. And active listeners up 2% year over year. So they reached 78 million, but down 2% sequentially. So again, like, you're seeing some growth year over year, but like you're not seeing it sustained over the calendar year, which is kind of frustrating.
Do you feel like, and you might have some thoughts on this later, but have they reached the saturation point? Because $78 million listeners is a respectable number.
Mm-hmm.
But I mean, is it they got everybody and now they just need to wait 10 more years for more people, or what?
I think that's the market concern right now. So you look at an ad-based business, the ways to make more money are to grow your listener base or have your listener base on there longer, right? Like that. Those are the multiples in that equation. And so if you see them starting to plateau, then you need to see them also becoming profitable, right? Like the people that invest in tech have an appetite for losses so long as it's coming with nice growth that can eventually be monetized well.
Right.
And I think people are worried that we're hitting saturation on the service, but the monetization plan isn't clear yet. And it could be even more cloudy in like a month or so when the new ruling comes out on their royalty rates.
Right, and that's, of course, still remains to be seen. Revenues were up a bunch, but for funny reasons.
Yeah, so they were up 30% year over year. They hit $311 million in revenue, which was pretty solid.
For a quarter, I mean, yeah.
But losses widened. They got crushed with legal settlements about some song royalties that dated prior to like 1972, I think. So this was something that had just been kind of like tagging them along for a little while.
Michael Jackson's estate owner of the Beatles album suing them, like what?
Yeah. And so they wound up with a charge of like, I think it was like 85 or 90 million.
If that hadn't been there, would it have been a decent quarter?
It would have been all right. I think they would have been just about break even.
Okay, so this is still highly depressing.
But yeah, I mean, it was a big charge for them to take, and obviously the market was not happy to see the losses widen, but I think it's really more of an issue of the core metrics for the business, active listeners and listening hours.